The European Central Bank has dropped its main refinancing rate by 25 basis points today, taking the policy rate down to a record low of 0.5%. In studio, we've got our guest host, Kevin Algeo. He's Managing Director at IG South Africa, and Mark Ingham, Director at Ingham Analytics. We also introduced Lars Christensen, CEO at Saxo Bank. Welcome from Saxo Bank from Scandinavia and Switzerland. It's good to have you here.
Thank you very much for having me.
So Lars, this rate cut was expected, but if you look at some of the analysis, I think initially positive reaction, but subsequently I think concerns what the next step might be from the European Central Bank, because I think more should come, and perhaps some disappointment that more wasn't done, and perhaps this was too late.
Well, frankly, you know, the Eurozone situation is getting quite hopeless, and you got to look at what can these guys do. There's nothing much left that can really be pulled into the markets. You know, how much lower can you make interest rates? How much more money can you print? How much more doubtful assets can you buy? You know, so really the Eurozone is in a bind that will not be solved by any of these initiatives. Even if we went to negative rates, as was sort of indicated that could happen. It's just a fundamental misconstruction in the Eurozone, and something totally different has to happen in my view. I've been very skeptical of it for a long time, and I think all these attempts at fixing it by kicking the can a little bit down the road are essentially futile, and you will not see growth in the Eurozone for years to come, and whether the rate is a quarter higher or lower is not going to make any difference to that.
Mark, coming into this conversation, it's very clear Mario Draghi saying it's not just all up to the ECB. Governments need to do their thing, do the restructuring, bring about the banking union, and also it's so important for him to make sure that this transmission mechanism from the central bank works.
Well, I'd be interested in Lars's view on this. I get the sense it's like pushing on a piece of string, and you know, banks don't particularly want to lend, and you know, consumers don't particularly want to borrow, and governments don't particularly want to cut their coat according to the cloth available. And so I see this as a situation that is staving off the day when some tough decisions have to be taken.
Well, I totally agree, and you know, the solution is not a banking union. The solution is something totally different that the whole Eurozone fails to admit, or even fails to recognize, which is that the euro itself is a misconstruction. The ECB is a misconstruction, and attempts at things like the banking union is to try to get through the back door what they can't get through the front door in proper elections and with proper popular support, because the fundamental problem here is that you don't have an underlying foundation for this currency. No sort of put together central bank from 17 countries can fix this problem, and the populations of Europe do not support the real solution to the problem, which would be much tighter integration, much bigger transfer payments between rich and poor countries, and that's just not going to happen. So what's left is to find a way to dismantle the Eurozone, and that's what's going to happen over the next 5 to 10 years, maybe faster if it's something that gets driven by market forces.
Well, so there's almost two directions. One is they can go to tighter integration with the banking union and possibly a United States of Europe, as it's called, or for disintegration. Which do you think is more likely?
I think the idea of a united sort of Europe in a US kind of way is a complete no-go. The populations don't want it. The situation is completely different to 50 states in the US with some kind of joint history and some kind of easy movement of labor. You have here thousands of years old cultures in some cases. You have very, very inflexible labor market. A guy that gets unemployed in Greece cannot just go to Berlin and take a job. I mean, this is a totally different situation. It's not going to happen. It would not be good for Europe if it happened, and I think if it moves in that direction, it can only be in a semi-totalitarian way, because you will never get the populations of Europe to vote for it, and quite rightly so. So the opposite is what we should now pursue in a constructive manner. Nobody's looking for an explosion of the euro, but if you made a plan now to dismantle this in an organized manner, it could be done, and it would be the best for everyone. So I think that's what they should be thinking about.
The key there is to dissolve it in a constructive way. However, the recent past shows that Europe is mainly only making decisions due to crisis. So do you think, unfortunately, that this is probably going to evolve through crisis?
They're between a rock and a hard place, right? They're already so far into this mess that it's going to be very unpleasant to unravel it, even in a controlled manner. But will be nothing compared to the unpleasantness of this raveling in an uncontrolled manner, which is, in my view, the alternative. There is no way that the Eurozone project will work, and hence the sooner you face up to it, the better. You can see protest votes all over the continent. You got the protest vote in Italy, you got UKIP going through the roof in England, you even got an anti-Euro party forming in Germany. So this is probably the last election where Merkel is going to get away with it. Next time there will be such a massive popular resistance, even in Germany. And France, nobody looks at France. France has massive economic problems. You know, everybody's looking at Portugal and Spain and Italy. Why not look at France? Once France has a problem, it'll be over, right? And really, I hope that the powers in Brussels will listen to common sense before we get to that point, because it's going to be very, very ugly if it has to be the hard way.
Yeah, it's quite interesting. I find it odd because the euro currency is a sort of political construct, and it's become an article of faith from a sort of political point of view that defies economic gravity. So, and it's quite interesting from a South African point of view, because the Eurozone, indeed all of Europe, is a very important trading partner for us. And we're seeing it from companies that I'm close to, you know, the weaknesses, and I think a sort of catharsis would be helpful for all concerned. But certainly from our vantage point on the southern tip of South Africa, it makes for interesting sort of decision making if you're a company, and where do you expand into other markets potentially.
Well, you're absolutely right. The euro and the whole idea of European integration has become a religion, right? That there's absolutely no foundation in any rational arguments anymore. There's nothing supporting it in real economies. We see always that things are going to get better 6 to 12 months. We heard that for years now, and it's just not going to happen. I tell you what, it's going to get worse in 6 to 12 months, and after that it's going to get worse again. So really, they have a fundamental issue here, and I think right now, if you're looking at it from an investment point of view, I mean, why did we open an office in South Africa last year? Why do we open offices all over interesting emerging markets where there's some prospect of future growth? Because we do not expect to see it in Spain and Portugal and Italy and many of these places. So I think right now, I would not put any money into the Eurozone. I think it's important from an outside perspective to understand that there's a big difference between the Eurozone and the 10 EU countries that did not make that mistake, where I think prospects are considerably better, also because you see some flow of activities and safe haven flows from the Eurozone to the UK, to the Scandinavian countries, etc.
And more policy tools.
Absolutely. I mean, that is also the problem, that what have you got left if you don't have your own interest rate, if you have to control everything through fiscal impacts, etc., if you cannot devalue when you're uncompetitive. I mean, the whole thing is really a terrible misconstruction, and you can see the damage it does in countries like Greece, where you have near riots on the streets, right? You have unemployment going through the roof in countries like Greece and Spain, you know, youth unemployment over 50%. Think about what that means to the next generation, right? If you don't have a job by the time you're 30, the likelihood that you're ever going to get one is extremely low. So you're killing off an entire generation of European youth, and it's really a very sad thing. And it's all down to the religion that they have in Brussels.
Yeah. Lars, I'm going to close off by just asking you, you actually refreshingly frank. I don't think many commentators are this honest about the prospects for Europe and of course the implications for us, as Mark said. But I just want to hone in on one aspect of Mario Draghi's comments, saying he'll be accommodative as long as needed, and saying he's expecting a recovery in the European region in the second half of the year, but the risks are on the downside. So to you, it definitely is.
It's a joke. I mean, they said that for ages, right? There's not going to be any recovery in the Eurozone, full stop. And it will not happen until you start dealing with the real issue, which is the euro, nothing else. There's no way you can save that and expect economic growth. How could it ever happen with the disparity in the way the competitiveness develops and no tools to deal with it? It won't happen. Not in 6 months, not in 12 months, not in 24 months. Wait and see.
Lars, thank you. Really good to have you here.
Thank you.
Lars Christensen is CEO at Saxo Bank.